Hey guys, I'm Scarlett from Miss Money, and AMC is climbing away slowly but surely, you guys. It is an exciting time to be part of this AMC journey right now. In this update, I'm going to explain why I'm still bullish on AMC, why you should add even more shares, and I'll reveal the latest on the stock, the news, and how AMC can literally go to the moon. Don't miss out on this golden opportunity, guys. But real quick, remember to hit that like and subscribe button with the notification bell turned on. You'll want to join the family of winners here. And another quick note, because I can't believe I have to say this, but please beware of spam in the comments. If you see any profiles pretending to be me or sharing a WhatsApp number, just ignore or report, please. Okay, now let's get to it. AMC is getting there, guys. It is going to the moon. We crossed that $9 mark yesterday. Hope you all bought that slight dip last week, and if not, it's okay because AMC has lots of room to rise, so hang on. Last month, AMC was just above $5 per share. We are almost double that price since last month. We had the spike above $10 in late February and a little dip leading into March. But don't worry if you didn't buy in that dip last week because guys, this is just getting higher and higher every day. AMC shares soared 18% on Monday and closed 15% higher for the day. GameStop, of course, was also part of the fun because on Monday it surged 43% after the video game retailer announced that board member and Chewy founder Ryan Cohen will lead its strategic transformation. Cohen is looking to transform GameStop into a heavily e-commerce focused business, so I honestly feel like there may be some fundamentals to look at there, and perhaps not just about that squeeze. I think part of the reason AMC continued to rise into this week is because news came out that Wedbush analyst Michael Pachter doubled his AMC price targets to $5 on the optimism of a post-pandemic world. Pachter did notice concerns about the movie theater chain's debt burden, though. He also went on to argue that AMC has raised enough cash by this point to keep alive through the summer. This could give the company a chance to survive until vaccinations permit the economy to reopen and moviegoers begin returning to the theaters. I, of course, will run to the theaters like those people. Also, we had last week when New York theaters were allowed to open, but with certain restrictions. Anecdotal news from the opening revealed that people do see the light at the end of the tunnel, and they can't wait for the theaters to really be open full-blown. Wedbush praised the steps AMC has taken to prepare itself for its reopening, installing air filtration systems in its theaters, establishing enhanced cleaning protocols, and spacing out seating to preserve social distancing. AMC, of course, reports its fourth quarter earnings this week, and 2020 was a rough year, and they anticipate a loss of $3.61 per share on an 89% decline in revenue, sadly. But I stand firm that AMC shareholders can see some great things in the end. You just have to hold on. It truly does have the long-term fundamentals. We can look at the chart, point to technical analysis, short squeezes, and all the hype. The highest AMC stock price target among the leading Wall Street firms, which we just talked about, is just above $5. Lost in the bullish talking points is that this isn't just a consumer demand problem. There's a real supply issue at the other end of the COVID-19 tunnel. It's been an eternity since theaters shut down in mid-March of last year. Since the shutdown, we've seen several new streaming services launch: HBO Max, Peacock, Paramount Plus, Disney Plus, and they're all owned by these media giants with movie studios that are now prioritizing their direct-to-consumer platforms over theatrical distribution. Unfortunately, waiting 3 months after a theatrical release is no longer the thing for Hollywood studios, and streaming consumption has only gone up, not down, in recent months as states relaxed their pandemic guidelines. You wouldn't have been able to watch Wonder Woman or Soul or any of these movies from home back in the day. But stick with me, guys. AMC will live on. AMC shares have nearly quadrupled this year. Here's the thing, one of AMC's biggest competitors, Regal Cinemas, went out of business this past year. I actually think this is great news for AMC because when people are dying to get back to the movies, AMC is going to be one of their only options. I've said it before and I'll say it again. I'm also super bullish about AMC because of its A-List app that acts as a subscription-based service. I personally enjoyed this app pre-pandemic, and I would legit go to like 3 movies a week. And yes, AMC did take a lot of my money from the expensive popcorn and soda, but I don't regret that one bit. AMC will be able to gobble up market share, even if it will be a shrinking pie. Analysts see at least 3 more years of red ink, and AMC has been raising money to be sure it makes it through this rough patch. AMC has made the most of the pandemic lull to beef up mobile ordering for concessions, offer assigned seating for screenings, and even create the option to rent out an entire theater on the cheap. If it can adapt to the future as well as it's trying to in the present, I think it'll come up on top. AMC CEO Adam Aron announced earlier this year that it raised $917 million of new equity and debt capital since mid-December. That number would be enough to make it through this winter, the company said. Following the news, Aron told CNN Business he believes the new funding and more vaccinations on the horizon will help AMC avoid financial catastrophe this winter and possibly for the rest of 2021. I've been looking at a competitor of AMC's that's not getting as much attention, and that's Cinemark. In fact, Cinemark stock is also up, closing the other day just above $24. It's just something to think about as you invest in AMC because we shouldn't ignore the competition. Regal is out of business, we know, but Cinemark is very much in, and it also has an app that's similar to AMC's. It doesn't have quite the nice perks that AMC has, but it's just something to note. In fact, it's interesting because last year there were rumors that Cinemark was going to acquire AMC, but those rumors were squashed as Cinemark CEO Mark Zoradi insists he has no interest in acquiring movie theaters directly from AMC as his rival looks to survive the pandemic. One thing is for certain though, out of all of this, fans, and that's most of us, that's me, that's I hope you guys, have an emotional and sentimental attachment to the cinema that started, when we were kids. We'll flood back to the movies as soon as it's safe to do so. So my new price prediction in the short term is $20, hopefully in the next month or so, and I see AMC hitting perhaps $100 per share in the long term. And since the recent COVID relief was passed and they beef up vaccination speed, hopefully as early as this summer, it'll be the perfect time for people to enjoy outings at the movies. And what other theater than AMC? While I do think it'll take a while for AMC to recoup its losses, I firmly believe that movies will thrive after the pandemic. And I expect movies will be out for shorter durations at a time, but it'll be an event like a concert or a festival. It'll just be like a fun thing to do with your friends and, make a whole thing out of it. Thanks for watching, guys. I'm Scarlett from Miss Money, and let's get rich and successful together.